Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliette Sarli. Great to have your company this Thursday afternoon as we monitor the talks that have concluded in Beijing between Presidents Trump and Xi. And the market action continued fallout as well from the budget. Let's have a look at where the CBO 200 has finished the day's session as we round out the day's trade. It's pretty flat there. Having a look at where the S&P ASX 200 is tracking. It is also flat, up just 0.7 of 1 point today, 8,631. Some pretty punchy moves. You had Megaport up by about 27%. Of course, Xero in focus as well. Overall, though, consumer staples were the weakest sector, down by about 2.1%. IT under pressure as well. And then the financial stocks getting a bit of a comeback with CBA clawing back some ground after its worst drop on record yesterday. Well, let's get into the themes of the day then, and we really have been looking here at this losing streak, a fifth session of losses here, and Asian stocks also swinging between gains and losses as the US and China began that summit. Traders really looking for the meeting for clues on trajectory of trade ties between the world's two largest economies. Shares in mainland China were down about 1% after hitting their highest level since 2021 ahead of the talks between President Trump and Xi Jinping. Well, down, prices are down. Coles reviewing that federal court judgment that found elements in its promotional pricing were misleading, noting the court found that all price increases were driven by supplier cost rises and therefore Coles says, quote, commercially justifiable. And the bigger Australian BHP and Rio Tinto hitting fresh records again today with copper and aluminium rallying. Let's have a look more broadly at the mining sector as we round out the day's trade. BHP there at $62.16, a fresh high, as is Rio above $190 a share. South 32 giving back a little today. The banks, I mentioned CBA coming back today up 1.5%, $156 after that big thumping that came through yesterday. Westpac also clawing back a little bit of ground while NAB was lower by 1.3%. And then the consumer staples sector amid that federal court ruling from over the ACCC and Coles. Woolies down by 1.5%, Coles down 2.3%, and Metcash off by around 2%. So just getting more on that, the competition watchdog scoring that landmark legal victory against Coles, finding that the retailer misled shoppers over discount pricing in store promotions. Xero was down almost 9%. We did see software companies as a whole sold off, and also Xero's profit coming in a little bit mixed or missing expectations amid some of these higher than expected R&D costs. GrainCorp, well, it was down 13% after its first half profit eased due to oversupply in global grain markets and weak pricing, which compressed margins across the supply chain. Megaport, though, had a good session, up 28%, securing $254 million worth of long-term network and storage contracts. And Bapcor there down by more than 19% after downgrading its full year 26 earnings guidance. And this was also due to deteriorating conditions from the Middle East conflict. Let's welcome to the COB David Scutt from StoneX. Scotty, great to see you. And, not a lot of outcomes so far from what we've seen between the meetings from Trump and Xi.
G'day, Juliette. Great to be back. No, there's a trickle of headlines starting to come through, but it's all speculation and sources information. I've just seen one of the latest headlines is that apparently NVIDIA has been approved to go and sell their H200 chips to 10 individual Chinese companies. The only issue is that they've had that permission for a long period of time and not a single chip has been bought. So we'll see whether there's been some sort of agreement that's been reached between Donald Trump and Xi Jinping, but that is one eye that's caught my eye. But apart from that, there's not been a lot of clarity out there about the broader things that markets want to see at this point in time, including about pressure on Iran to go and help ease this Strait of Hormuz blockage we've got at the moment.
Yeah, that continues, doesn't it? But it doesn't seem to be worrying Wall Street. Record after record after record there. Why are we underperforming?
Look, the local market, let's be honest, doesn't have those growth components. And I'm sure that ad nauseum you've probably gone on the program about this, but we just don't have any big growth components. You can see that the ones that we do have are doing pretty well at the moment. The data center space, as you mentioned, there was some of the stock price performance today. Megaport doing very well. Comeback Kit. A lot of the other parts of our market, though, banks, miners, discretionary, and we're in an environment where the squeeze is just on. So there's not a lot of growth avenues coming through, and of the big players on the market, earnings are really struggling. Mentioned what's going on with the miners at the moment. Clearly, we're having some redirection of capital away from the banks in the wake of that update from the CBA to some of those high dividend-paying companies in the mineral space.
Well, let's get back then to, I guess, the economic fallout the longer this war goes on and what it means for global inflation and, of course, rates, because the outlook here for the Fed, and Kevin Walsh confirmed overnight, you say the outlook isn't getting enough attention here for what the Fed might do.
Yes, with all Wall Street's records, and the AI infrastructure build out, the circular funding, which is helping to gain juice earnings, that's dominating everything for the time being. But in the rates and FX world, where I like to go and sort of work around, there's been a big shift. The Fed for a long period of time is expected to go and continue cutting rates. And now we're flipped. We've got 8 basis points or so priced for hikes over the course of this year. And even though futures, you don't get a lot of volume traded further out the curve, we now have the implied pricing on futures, no change, and the risk of a higher Fed funds rate by the end of next year. So the interest rate outlook in the United States is really starting to shift, has much better productivity background than what we have here in Australia, but still very tight labour market conditions, and you've got this energy pulse feeding through the economy. And as we saw with the PPI data overnight as well, that is deeply concerning because it is now already showing up in services and the like, and it feels like a bit of a repeat of what happened in 2021, 2022 when it came to that inflation surge.
So, of course, we're looking really at the implications here too for currencies. Our dollar's been pretty good, but what's the outlook for the greenback?
Yeah, the greenback, surprisingly, has been in the wars a little bit over the past month or so. The relationship between crude prices and the US dollar, very positive correlations broken down. And we've seen this release valve mechanism in some of those other bigger names that's taken place, particularly the European currencies, the euro and also the pound. It really just shows you where the US dollar sits at the moment. The fact that in the UK, the parliamentary chaos there about what's going to happen with Keir Starmer doesn't seem to be a matter. But with this shift in rate landscape that we're seeing right now, if that does start to come to fruition, we saw Susan Collins out from the Boston Fed last night. She was talking up the potential for the next move being higher. If that starts to get priced in and really seriously priced in, the US dollar is going to rip against those really low beta names. So it will have a big implication for the currency space. And because so many commodities are priced in US dollars, it would likely go and smother some of those gains we're seeing in some of those other commodity markets out there right now.
Yeah, interesting stuff, Scuddy. All right, well, what is the outlook now here for us as well? I don't think we've spoken since we had the RBA, well, at least you and I haven't, meeting last week. What was your take on that, and what happens now? Because a lot of people saying, how can they justify another 1 or 2 hikes, particularly on the back of what's been released with the budget and, of course, just the global inflation shock as well?
You're right, and you mentioned what's going on. Bapcor warning about trading conditions, citing the Middle East. I hate to say that's an excuse, and we're seeing so many other those retailers that are giving downgrades. They're pointing to what's going on in the Middle East. It's got nothing to do with the Middle East. It's just you've got conditions are tightening out there in the marketplace. You've got the combination of slowing wages growth in nominal terms, real wages growth is going backwards. You've got higher interest rates, borrowing costs are going up, and it's really starting to go and crimp. Now, in a normal world, if you didn't have the inflationary pulse coming through, you'd say, well, it's ready to go and start cutting rates. But we have this really weird dichotomy in the local economy where you have pockets of extreme strength and pockets of extreme weakness. And unfortunately, when it comes to monetary policy, they've just got one lever and they can just go pull it back and forth. And at this point in time, unless the labour market cracks, unless this weakness we're seeing in consumer discretionary starts to show up in labour market outcomes, I would suspect that we'll see at least probably another hike coming through, if not one after that. Then we do start to get into the realms where we really start worrying about economic growth moving forward.
Absolutely. All right, Scotty, let you go. Thank you, as always, David Scutt there from StoneX. Getting back to equity specific, the stock of the day on an international special on the call was Cisco. Andrew spoke with Alfreda Yonker from Alfinity Asset Management and Mark Gardner from MPC Markets.
I think at up 20% in the aftermarket, I think the horse is probably bolted for now. Like I would have been, if we'd had the call yesterday, I might be, we might have rolled the dice sort of buying into earnings. Because, the good thing about the US market is, and our clients have definitely found, they're just an inherently bullish people, the Americans, and, you get a good result, it actually goes up as opposed to the ASX is a little bit more dicey. So, and look, forward PE's only around the 20s mark after this result. So it's not like wildly expensive, but I'd probably prefer to buy on dips. So after that move in the aftermarket, I'd probably say it's a hold at this stage.
It is a high quality company. We just prefer some of the other players within that space. Yep. I agree, it has really not run up a lot. So there could be more in this one over the next while, definitely. But I would say be wary of massive multiple re-ratings if you're not going to see the earnings come through as well.
10 stocks picked by you, 2 experts, 1 hour.
Let's get to the companies that have been nominated by you.
It's like a witch hunt over there. Everyone hates data centers.
Just remember that most of their earnings are offshore, so there's no franking credits.
The call is brought to you by Centuria, an ASX-listed property fund manager with $21 billion in assets under management. Want to diversify beyond equities? Explore the Centuria Sydney CBD Prime Office Fund at centuria.com.au.
All right, well, the market has closed. Let's look at some of the leaders and laggards in today's session. We touched on Megaport there, rising on some contract wins up by 28%. 4D Medical also had a good day, as did IAG, Codan and Orica. To the downside though, plenty of those. GrainCorp on its trading update, along with Xero there, down by around 9%. In the small end of town, these stocks did well. Sky Metals was up by 17%. Smart Parking, it also had an update today. The market seemed to like that, up 13% to 92 cents. The laggards in the small end of town though include Bapcor on that trading update, and of course Scuddy questioning whether or not they have the right to say that their downturn is due to the Middle East, but it certainly seems to be an excuse that corporates are given in the current environment. Let's have a look at what we are looking out for tonight, including US April retail sales, first quarter GDP from the UK, and Applied Metals out with its numbers. Tomorrow, we get New Zealand April manufacturing PMI, April PPI from Japan, China's first quarter balance of payments. AIA, Air New Zealand, Auckland Airport, will have an update, and Alkane Resources as well through with its full year 26 earnings. I think we're pretty flat in terms of where we've closed, very flat there on the CBO 200. The S&P ASX 200 just had a little push into positive territory on the close, meaning that it's snapped that losing streak, up 10 points, 0.1%, 8,640. So we'll take a win where we get it these days. All right, we will be back bright and early from 9:45 a.m. Eastern tomorrow. We'll see you then.